Of a home has gone from 375,000 in June of 2020 to 525,000 in June of 2022.
And that price increase is why economist Tim Nash says a price correction is on the horizon. According to a report by Moody Analytics, 2/3 of the nation's largest housing markets are overvalued. With inflation up and pay rates down, homes aren't selling like they were initially post-pandemic.
People just can't buy homes. They can't afford it with that scenario, that three-pronged scenario of lower real wages, higher interest rates, and higher prices. So we think that prices are going to decline, sales are going to decline by the end of the year.
Some economists have referred to the decline in home sales as a housing recession. Dr. Spencer Robertson, Director of Real Estate at Central Michigan University, says that the government will have to step in to prevent the market from crashing.
Market forces can be influenced by government policy. So I would expect government policy to shift at some point in the not distant future towards making sure we keep interest rates at a stable level so that there isn't a crash or a really strong downward trend in home prices.
But why are we seeing this drop now?
We saw growth that was more than normal over the last few years. The reasons for that were increase in demand for housing in the pandemic, as people wanted larger places to live, as there was a lot of work from home and likely will continue to be. And then the Federal Reserve printed $4 trillion of money. So some of this decline is just kind of retreating back to where things really ought to be, kind of their more natural intrinsic price.
Experts say for those looking to buy sooner rather than later, the best time will be between the end of this year and early next year. Lanita Brooks, WNEM, TV5.
Despite the potential good news for buyers, interest rates are still up. Just last week, the 30-year rate rose to 5.89%, more than double what it was a year ago.